So the last three appraisals that I just got in, like the last week, are all showing in San Diego declining market. What's up, guys? Kenny Simpson with the brief. We're back with another week. What do you know? We're going to talk about rates. That's the first thing I want to talk about is rates. What the hell is going on with rates? Well, as you guys know, it's no new news. Rates are continuing to go up. I'm just telling you, Jerome Powell clearly is signaling. We might have thought he was bluffing. I think that's over. He's going to continue to raise prime. Literally 30-year fixed mortgage rates for a lot of lenders are in the 7s. Investment properties are even higher. It's crazy. So that is impacting the market more than we think because we never thought rates were going to be this high. So it's causing a problem. But places like San Diego, inventory is lowering. So we'll see what happens there. The second thing I want to talk about this week is also conforming loan amounts. We're coming up to 2023. FHA, they do release theirs, and they're not usually don't start accepting new loans until the beginning of the year. Right now, there's 715 is a new conforming loan amount. That will probably go a little bit higher. Lenders are always conservative because if they're basically doing the loan now, sitting on them, and they'll sell them when Fannie will accept a new higher loan amounts, they don't want to be over, guess wrong, and then have to eat some money. So new conforming loan amounts, they're higher. They're higher for 1, 2, 3, 4 unit. I think in LA, you're going to be able to do like a $2 million loan amount on a 4-unit property. So I expect those to probably not go up as much because we might see values and stuff. So we might see those kind of loan amounts stay and level off for the next couple of years. And the last but not least is what I mentioned in the beginning of the video is the market decline. Look, guys, it's funny that everybody's comparing the market decline or interest rates to the lowest interest rates we have ever had in my lifetime. The highest boom in our lifetime, right, of values, but we've never had so much money flowing around as well. So that's why you're seeing tech stocks sell off, or real estate, or all this. Guys, we all knew this was going to happen. What we just didn't predict is inflation would be this long, this dramatic, and also interest rates would literally be at 7%. Crazy. When literally this time last year, you're still probably getting maybe in the 2s and 3s, right? Which is crazy. So with that being said, markets are going to decline. Buyer demand is weighing. But here's the $1 million question that we just don't know. If you're buying today with these high interest rates, is this the right move? We just won't know. But until next week, have a good week. We'll see you guys soon.